Hey guys, welcome back. I'm Jeb Smith, real estate broker here in Southern California, and today we're going to be discussing the August 2020 housing market. Now, last week I did an update where I discussed, the July housing market with an update, a mid-July update. And today we're going to give you new data that just came out with regards to pending home sales. We're also going to discuss the GDP numbers that recently came out. I'm going to show you a map that tracks the inventory shortage across the United States that gives you an idea of what markets are most impacted by the housing shortage. And then we're also going to look at actual statistics for Orange County, California. Now, I realize that some of you are not local to Orange County, so I'm going to save that to the end where I go over housing numbers to show you exactly what's happening in our market. But before we get into this, I want to start by saying, I'm not naive to think that everything going on right now in the economy with regards to stimulus, with regards to kids being held back from school, and which is going to impact employment, isn't going to affect the economy. It definitely has an effect, but it's a trailing effect. And what I'm telling you is what's happening in the market right now with regards to buying, with regards to selling, inventory, so on and so forth. Now, I do believe that all of what's going on right now does have an effect on the economy. But remember, a slowdown in housing, a decline in housing doesn't mean a crash, right? And I'm a firm believer that, we aren't going to have a crash in the market based on what's happening now. Now, I realize unemployment numbers are high, but until someone can give me accurate information to tell me how many of those unemployed are homeowners or are homeowners who are leveraged on their housing or aren't in a position to sell without having to short sell, or potential buyers and no longer buyers, then it doesn't play into the forecast. Now, again, I'm not here to tell you that it's all rosy, but what I'm telling you right now is that the market is strong. Housing is probably the strongest sector of the economy at the moment, and it's partly leading us out of what we went through the last 3 months. Now, I do believe that the rest of 2020 will look a lot like what we're experiencing right now, and we're going to bring up some data to support that. But at the same time, what happens in 2021, 2022, I don't know. But I do think what is going on will have an impact in the future. I just don't believe it's a crash. So if you're somebody that is interested in buying a property, if your time horizon to live in that property is 5, 7, 9 years, I think the average right now for somebody to stay in a house is around 9 years, then it probably has very little impact on you in the long run. Now, could you buy that same property cheaper in 2 years if the market goes down? Potentially, but the caveat is you don't know where rates are at that time, right? You know where interest rates are to where they are today, and currently sitting below 3% for most buyers out there. So if the payment makes sense to you, you're comfortable with that payment, you're comfortable with the property, then you can't time the market. There's no perfect timing in the market. There's a lot of people that tried to time the market after the last recession and never purchased because they thought the market was going to continue to decline. And it's done exactly opposite. We've gone up on average 5 to 7% per year since that time. And there's a lot of people hoping for a market crash. The key word there is hoping. But that's enough of my spiel there. But before we get into the data, I'd like to take a minute and say thank you for taking the time to watch. Thank you for all the support out there. If you're new to my channel, it's all about real estate, helping buyers, helping sellers, helping homeowners navigate the crazy world of real estate. And we touch on finance, we touch on trending topics like forbearance, etc. So if that interests you at all and you haven't already, do me a favor and hit that subscribe button. And, leave me comments if you have them. If you have questions, leave those as well. I always try to go back and address those. But let's take a minute here and start with the first thing that came out this month, or since our last update, rather. So last month, we talked about existing home sales. They were up 21% in the month of June, while we recently got data this week that shows that pending home sales are up 17% in June as well. Now, this is the second consecutive month of double-digit gains. And again, I will put a link to all of these reports in the description below. So if you want to find any of this stuff, it will be listed down there. You can just click on the link. But this one's from Housing Wire, and it talks about again, pending home sales being up 17%. Now, it does go on to say that sales of existing homes will probably fall 3% in 2020 to 5.18 million, and sales of new homes likely will rise by 3%. And that's by Lawrence Yun, who is National Association of Realtors chief economist. Now, the reason that existing home sales are probably going to decline is because we lost nearly 2 months of home sales where we couldn't, sell homes because of stay-at-home orders, so on and so forth. So that's a big reason that home sales are down. But the median price of an existing home this year will increase 4.3% to 283. And the median price for a new home will likely gain 1.1% to 324,900. So pending home sales in the Northeast region rose 54% in June. The biggest gain in the report, the Midwest, sales increased 12.2%. The South was up 11.9%. And the West, we gained 11.7%. So that is all good news. But at the same time, we received a report that GDP, here, this is a chart. This one's actually from CNBC. This is a chart they're using. So GDP was down nearly 33%, worst on record. And honestly, somewhat to be expected, right? I mean, we shut down the economy for nearly 2.5 months. There's still a lot of businesses that aren't fully operational here in California. We've opened businesses and had to shut them back down with regards to restaurants, salons, all of that stuff. So that is definitely having an impact on the economy. There's a lot of industries like hospitality, entertainment, sports. All of these are truly having an effect on the economy, and they will for the foreseeable future. The unemployment numbers are going to fluctuate. You're going to have people going back to work. You're going to have people, getting laid off or furloughed. There are going to be businesses that go bankrupt. That is something that's going to happen. Now, we do know that there is another stimulus bill in talks. It's going to be the HEROES Act. So not the HEROES, but this is basically their rebuttal to the HEROES Act. It's the HEROES Act. And one thing they verified in it is that there will be an additional stimulus check, but things we don't know. We don't know, if the eviction and foreclosure moratorium is going to be extended. We think it's going to be extended just based on what's happening in the economy. They need to extend it to help people out. That is going to cause, investors some trouble, right? If you've got tenants that aren't paying, you can't evict them. What do you do? Fortunately, there is the potential to ask for mortgage forbearance and have, the forgiveness of not having to make those payments every month and potentially move them to the back of the loan or have a repayment plan. And we've discussed that in other videos. I'm not going to talk about it here, but there are measures in place to help those people. But more importantly, there is going to be additional stimulus thrown out there to help Americans. The one key in the stimulus that is still being negotiated is the amount that of unemployment, the additional supplement there. They wanted to continue the $600. It looks like it's going to be $200 now based on what was put out there. It may be negotiated and they may settle somewhere in the middle, but that amount is going to entice people to try to go back to work, right? There are a lot of people out there currently that didn't want to go back to their jobs because they were receiving that additional stimulus. I think this puts people in a place where they have to go back and do, try to get a job, try to earn more money, because that additional 200 is probably not going to supplement the full amount that they're losing by not being employed. So that I believe will help the employment numbers, get more people back, looking at trying to find a job. Now, the biggest driver in our housing market so far has been a lack of inventory, right? We have very little property on the market. Buyer demand has been up. Interest rates are low. The big driving factor clearly is interest rates, but it's also coupled with a lack of housing, low inventory. And so that's something we've been experiencing for the last 5-6 years. It will continue for the foreseeable future. And will likely, that is what's keeping our housing market solid, to be completely honest. I mean, it's not just low interest rate, but it's low inventory. And until that changes, we're going to see a market move sideways to up. Now, it could decline, but a decline of 5%, 10% isn't a big deal in my eyes. I mean, it's almost to be expected. We need some sort of pullback. It's like the stock market. You can't go up forever. Housing market's the same way. We need to see a pullback. We haven't seen one in some time, but just because you see a pullback doesn't mean it's a crash. And that's what people need to understand. But let's talk about housing shortage for a minute. So here is a housing shortage a graph that is being used. This is on the National Association of Realtors website. Again, I'll link to it below, but this shows the markets that are most severely impacted by a lack of housing. The ones in dark red are the ones that have the lowest amount of housing, the biggest housing shortage, whereas the ones in lighter blue are the ones that have plenty of housing. So what I will tell you is the ones in red are the ones that are going to be last to be affected by this, right? Because they have a lack of housing, and it's going to take time for that inventory to be added to the market. And this is a perfect example. Now, the areas that are in blue, they will probably be impacted first, because if you have more inventory come to the market, it's going to change the dynamic in those markets. More inventory coming to the market in, say, Southern California is only going to help buyers with more property out there. It'll slow the market a little bit, but it's almost needed, because in our market right now, we have multiple offers, properties getting bid up way above asking in a lot of cases. So keep that in mind. It's still a very, very competitive market for the foreseeable future here, at least in Southern California. Now, I did mention I would bring up a chart to show you where we are with regards to numbers here in Orange County. I'm going to do that in just a minute. But I'll start off with this. If you're a buyer and you're looking to buy a property, as long as your time horizon is in the future, 5, 7, 9, 10 years out, whatever, you have very little to worry about the market declining, in my eyes. Could you wait and buy it cheaper, like I mentioned? Potentially. Could it cost you more? Potentially. I don't know what's going to happen. I do know there will be effects of what's going on, but real estate's a long-term hold. It's not something you should be buying, expecting it to go up as soon as you buy it anyway. So that's my 2 cents on that. As a seller, if you're looking to get out of the market, now's a good time, right? I mean, there's very little inventory, very little competition in most markets, at least here in Southern California. Properties that are priced at fair market value are selling, and they're selling relatively quickly, and a lot of times with multiple offers, and the prices are going up, as we saw in that report earlier when we talked about pending home sales. So let's take a minute here and pull up Orange County numbers. I'm going to make this a little bit bigger so that we can see it. But these are the numbers for Orange County as of June 2020. Now, this compares June to last year, 2019, versus this year. We're down in new listings nearly 15%. Pending home sales are down nearly 44%. Closed sales are down nearly 22%. And this is from June of last year. But year to date, we're down what? I'm looking at another screen here because it's actually a little bit larger, but new listings are down 23%, pending home sales down 28%, closed sales down 16%. Days on the market are down last year in June and year to date this year. But median sales price is up 3% from June of last year, up 5% this year. Average sales price is up 4.6%, up 5% this year. People are still getting, I won't get into the percentage numbers there, but months supply of inventory. Last year we were at 4.1. This year we are at 3.2. That's for detached housing. Attached housing looks a lot the same. Bottom line is there are less sales because there's less inventory out there, but prices are still continuing to increase. Until inventory changes, Rates aren't going anywhere. We can be clear with that. Rates aren't going anywhere for the foreseeable future, at least 6, 8 months, probably a year out. Rates aren't going to move. So, buyer demand will likely stay there. And inventory is going to be the driving factor. What happens to inventory will dictate where the market goes. Typically, we see a slowdown as we move into the fall. That will probably happen this year, just like it's happened in the past. The difference this year is you don't have the kids going back to school. You don't have, all of those factors that you would normally have play into the market. So it's really unclear as to what happens in the fall. But typically, as we get closer to the holidays, the market slows down. This year will probably be the same, just because people get into the holiday spirit, don't want to put their houses on the market, so on and so forth. It may be different this year because of everything's different this year. But, with that said, if sales do decline in the fall, then that just puts more and more pressure on inventory. It's an election year that could play into the real estate market as well, but that's a whole different conversation. So, I'm going to leave it there based on what's happening with the data that's put out there. I will continue to update you as more information comes out. But right now, you have a solid housing market. Regardless of what's going on in the economy, the housing market is still stable. It will likely stay that way for the rest of the year. I'm not here to predict what happens in the future. I'm not here to tell you to buy a house. I'm not here to tell you to sell a house. Each person has their own goals, and you should follow those. I can tell you I'm not selling. Because there's no reason to sell, right? The market is strong. So anyhow, that's my 2 cents. Do me a favor. If you have questions, comment below. As always, I appreciate you taking the time to watch. I appreciate your support. We'll see you again soon. Have an awesome day. Bye-bye.